Welcome once again to our personal finance channel, where we discuss money, where we break down the financial markets, where we crack down those hard concepts that we have had in the financial market. And here I am today, your executive financial advisor, Prosi Chimboa, to teach you about a life insurance cover. We ended when we were talking about the different instruments that we have in the financial sector, in the financial services, and we talked about insurance, unit trust, bonds, the stocks, and the different growing our cash assets. So today I am here to talk to us about life insurance cover. What is a life insurance cover? A life insurance cover is taken out, is a policy that you take out with an insurance company. For example, you can say, I want to prepare for my retirement. I want to prepare to plan for my children's education. Why we say children's education, I want to even plan for the young children. I am 20 years and you're listening to me now. You're watching this video from wherever you are. You are 20 years and you are saying, I want to get married in maybe 28 years or whichever age. You come and sit down on table and we talk through and we plan so that you do not be a burden for people to collect for you money as if you didn't know that you will get married, you see. So all these things, even for us that want to buy cars, you can do all these things through a life cover. Just mention what you want to do in your life and a life cover will help you achieve that target. So at the desk where I sit, we have different insurance companies. Life covers are taken out by an insurance company and they are regulated by the Insurance Regulatory Authority of Uganda. So when you open up an insurance cover, just know that you are protected. The business is highly regulated. So it is not pyramid, it's not capital chicken. Capital chicken where people will wake up and your money is no more. So for a life cover, many people that are watching me, many of you that are watching me now, you could have held or taken out a life cover before, or you have been planning and you have questions around, and then you say, no, but you see, when I save my money and I have not reached the time that I had suggested I will take out my cover, I will lose money. Truth of the matter is, yes, if you do not manage your contract well, you will lose money. But when you manage your contract well, your life cover contract well, you will walk to the bank, you will walk away a happy person. Because just like any other contract, even if it's a building contract, you will have a contract, and when this contract is running, there are terms and conditions. And life insurance covers, the terms and conditions are not limited to Uganda. They are international regulations. International regulations, highly regulated to manage and to protect your savings. So when you take out a life cover, you need to understand, for how many years have I signed? If you have signed a minimum of 5 years, for example, they can go as many as 25 years. But if your minimum is 5 years, if you have signed for a 20-year plan, if you have signed for a 10-year plan, I urge you to always stick to the game. If you say 5 years, run the 5-year race, be diligent, be persistent, be consistent with your savings, and you will eventually run to the bank. The insurer will have a win-win. The insurer and the saver or the policy holder will all have a win-win what situation. So you need to understand that if I violate my contract at this stage in time, for example, it is internationally known that if you take out an insurance cover and you have not saved up to 3 years of the policy, you will not get back that money. But when you save and you hit the mark of 3 years and above, anytime you want to back out, anytime you have a challenge that calls for you to cancel the plan, you can have some money back. So always, as a must, run the race and make sure you pass the 3-year mark. Then you can be rest assured that you will not lose all your money if you decide to wake up and cancel. So if you sit down today and you say, I want to come and open up a life cover, and I am planning for my children's education, that by the time they get to university, I am able to take them to whichever school I want, depending on the money you have been saving. Some parents are thinking Harvard. Some children, by the time they go to university, their parents are no more. Or the parent has retired, long retired, and they can no longer pay the school fees. But if this parent had a plan, that if my child goes to university, I will have this money, they will still study even when the parent retired long time ago. So all those terms that are used in the cover help you to know how to manage your contract. For example, in a life cover, we have what we call surrender. We have what we call lapse. Surrender is what I first explained. If you feel like, oh, I cannot save anymore, I have challenges, and I want my money back. So anytime you feel like it is surrender, sit down and look at the time you have spent with this cover. If it is 3 years and above, contact your company and you begin the surrender process. But then know that because it's a surrender condition, you will lose some money. I do not want to come here and sugarcoat for you and tell you that all is well, the way you've put your money is the way you will get it. There are terms and conditions, you know, just like we were suffering with COVID recently. And I want to give an example of NSSF. Our NSSF Act did not allow to just say we have this pandemic, so let us pay our money out, because yes, it is your money, but there are terms and conditions under which you can get this money. So even when people were dying like chicken in COVID, no one could access that NSSF money, because the act says A, B, C, D, this is when you are supposed to come for your money. Either when you have retired or you have passed on and your children, they claim it as a death benefit. There are terms and conditions. Or you are incapacitated, total permanent disability. So when all those terms are looked into and you don't fall in any category, the company will say, no, please wait. And you'll have to walk back, and you will not go to any court to claim anything, because the contract clearly sets it like that. It took NSSF 2 years for us to get an act that allowed us to access our money at 45 mid-term access, and it had to go back to Parliament. Now that is how these contracts are. So when you understand a contract, when you understand an insurance contract properly inside out, you will run with it and eventually smile to the bank. If you happen to pass on, if it is it is going to be paid out as uncertainty, then your children will be okay. Yes, they will cry, mommy, daddy has gone, but you would have left them a cushion on where to cry from. So surrender is one of those technical terms that has disturbed many people, and today we want to, you can share your questions in the comment section. You can share and keep asking those terms that have given you headache in insurance, and I'll be here to help you to break them down. So the next episode, we shall be discussing what a lapse means in insurance, because it is also another, you can receive your statement and it reads lapse. What does it mean? You see? So you see, life cover is a very broad subject. It's a very broad thing, but when you understand it, you will use it to your own benefit. So today, allow me to stop here on the life cover concept, on the life cover topic, and I will still return on the same topic to break it down for us to understand what a life cover means and how you can benefit from it.